Did you know that in March of 2025, the average interest rate on a credit card in the US is 24.2%? That is crazy. That's almost 25%, which is 1/4 of whatever balance you're carrying on that card. Let's say you have a $5,000 balance. Over the course of a year, you'd be paying more than $1,200 just in interest. That's really, really bad. In this video, I'm going to share some tips on possibly lowering that interest rate to help you save money and improve your credit. My first tip is to improve your credit score. This directly affects your interest rates on credit cards and loans, mortgages, anytime you need to borrow money, basically, which using a credit card is borrowing money. You have to pay it back, and it's a little more flexible oftentimes than a loan, which has a monthly payment that is always due, or a mortgage, which is generally a monthly payment. A credit card, it has a monthly payment too, but the amount you pay is variable. There's a minimum amount, which is something you should always pay. You should never not pay that. You should always pay it. And to get a better interest rate on all of these kind of loans, whether it's a car loan, a mortgage, to buy a house, a credit card, anytime you're borrowing money, the better your credit score is, the better your interest rate will be. So I wanted to show you a graph of the credit score ranges. This is according to Experian, and this is the FICO score. We'll start at the bottom. A poor credit score is when your numbers are from 300 to 579. A fair credit score rating, according to Experian, is 580 to 669. A good FICO score is 670 to 739. Very good is 740 to 799. And exceptional is 800 to 850. So having a good credit score is pretty much the minimum you want to have to get a decent interest rate. So basically, when you have a very good or exceptional credit score, the lender looks at that and says, this person's a good risk. They will pay it back every month. And so that's good for you and them. Some ways you can improve your credit score is to pay your bills on time, reduce any outstanding debts, and avoid new credit inquiries. So if you're trying to repair your credit and boost the numbers up to a good or exceptional rating, that basically means pay every bill every month on time or early. You know, if it's a problem for you, just pay it early. Give yourself an extra week or something and just get it done. Reduce your outstanding debts, which means start paying down your existing loans and credit cards and whatever you can do to reduce the amount of money you owe. And don't try to apply for new credit cards while you're trying to repair your credit. The inquiries that a new credit card or loan lender would make can reduce your credit score. Another option might be to move your credit card balance, which means the amount you owe, from a high interest credit card to a new zero interest rate credit card as an introductory offer. I've never done this myself, so I can't attest to how well it works or how it works, but it's an option to look at. If you have a lot of credit card debt that you think you'd be able to pay off in the promotional period when the new credit card would give you 0% interest. It sounds good, but I really, like I said, I've never used it. I would check with the existing credit card company to see if they are going to charge a transfer fee also. I have no idea how much these fees. Like I said, I've never done it, but do your homework if you're considering transferring to a zero interest rate for whatever period their promotion is for. Find out how long that is, if you can pay it off in that time, because then you'd need to know how much the interest rate was on the new card after the 0% promotional period ends. It's a lot to consider. So I would just look into that and know exactly what you're getting into. And here's a suggestion that I think is great. I've never done this, but applying through a credit union, if you belong to a credit union, or if you don't, you could join one, applying for a credit card through the credit union. Their rates are generally about 12.86% instead of the 24.20. So that's a significant amount. It's almost half. And that's a huge savings if you only had to pay 1/8 instead of 1/4 of the balance in credit, in interest rates, I should say. That's better. It's just a simple math deal. So I love my credit union, even though I think they issued me a debit card at one point, but I never used it. I don't use ATMs. I don't like paying fees, and I know there are plenty of ATMs now that you can use that don't charge fees. Well, just never gotten that habit, and it works okay for me. I'm fine with not having a debit card. But I've never had a credit card through my credit union either, but I do love my credit union. They don't charge fees for banking. You know, I love it. It's wonderful. So I would recommend checking out a credit union to see if you qualify to join. I got mine when I was working at a certain job, but I think now they're much more open to just about anybody joining, kind of like a bank, but much better. Another tip for dealing with credit card interest rates is, and it's just a good practice in general, is to pay more than the minimum amount due on your credit card balance each month. If you have a $2,000 balance, the minimum payment might be $40. I don't know. I pay my credit cards off every month, so I really don't know anymore. But I think I've seen $40 as a minimum payment recently on one of my cards. So if you pay just $40, it's going to take you a long time to pay off that $2,000 balance. So pay more than the minimum amount whenever you can. And pay the highest interest rate credit card. If you have several, pay the most on it, but still continue to make the minimum payments on every card every month. That is huge. This last tip is something that I've actually used myself. If you know that you can't pay off your credit card every month, which I've been in that situation a few times, I try not to ever, but sometimes, for instance, after I've bought a house and I need to use a credit card because I've spent a lot of my available cash on hand, I go ahead and use a credit card, kind of like I treat it as a mortgage, that it's just going to be something I did or I have to do to pay ongoing bills for a few months. I usually always pay it off within 6 months. It just varies, but I'm just like everybody else. At different times, I've had to use my credit card and not pay it off every month. I try to all the time now, and I do all the time, but I understand there's times in our lives when you can't. So if you know you're going to have a balance on a specific credit card, call the credit card company and be polite. You know, you're going to have to give them your account number and whatever else they ask for, and ask if they could lower the interest rate. And every time I've called, they've done it. It helps if you pay your credit card off every month, and if you pay it on time, make your payments timely, because they know that you are a good risk. They know that they can get their money from you. And when you know you're going to have a balance, lowering that interest rate from, say, 14% or 18% down to 12 or whatever they can do, any amount is a good thing to ask them if they can do for you. And like I said, I've had good luck with this, so it's worth a shot. And the better your track record with them making payments is, the better your chances are of them lowering the rate for you a little bit. If you're new here, I'm Do It Myself Peg, and this is my YouTube channel about frugal living and just ramblings about my life and different things I've done, and etc. and so on. And if you like this video, consider giving it a thumbs up. And I just wanted to say that it's a real burden to have high interest rates. So if you can do any of these things to help improve your credit score, pay things on time, anything to reduce those interest rates, it'll make you happy. Trust me. It makes me happy when I have good offers. Like, I have 4 credit cards right now. I don't like that, but for different reasons, I've applied for these different ones. I had one for the longest time, and I decided, well, I probably should have 2 just in case, there was fraud on one or something. So then that led to getting 4 total, which I don't even use 2 of them ever. So my point is, it's nice to have the option of qualifying for a credit card if you needed a new one. If you have a good credit score, your interest rates will be lower, and that's a good thing. So I hope this helps, and let me know if you'll use, or if you've ever used, any of these tactics to improve your credit score or to get lower interest rates. And I'll see you next time.